But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Greetings and welcome back to the Junius Maltby channel. Thanks for joining us for another installment of Gold Motivation and Discussion. We've got a few pieces of news here that we can discuss today and become further motivated in holding and stacking precious metals. One thing we'll touch on, we won't go too in-depth on, I'm sure you've seen it, a lot of articles out there, the virus scare, this coronavirus global health emergency. It sounds like there was an outbreak in China, a few fatalities, thousands stricken with the, I don't know if it's a flu-like or pneumonia-like. I've read different things that it causes pneumonia with flu-like symptoms, and it's obviously a respiratory illness. There has been some fatalities, a lot of people stricken with it, and now there is a case here in the United States. And my understanding about a coronavirus is that's a virus that's able to make the leap from animal to human, which obviously it's done that if humans now have it. And the virus, there's a concern that it's going global fairly quickly. One of the things, again, I'm not going to spend too much time on this. I read the book A Hot Zone, or The Hot Zone, years ago. And if you're familiar with it, that's the discussion about the Ebola virus. Talks about the outbreak from some labs and just the discovery of the Ebola virus in Africa, the different strains of it, and the worries that surround it. One interesting point was the individual that discovered the Ebola virus, one of the leading scientists behind it. He moved to a very rural and mountainous region in the United States as a result of his knowledge and experience with viruses. He believed that man would suffer from a virus and not from mankind-caused issues such as warfare, nuclear warfare. He thought that a virus posed the greatest threat to humans. And it makes sense if you think of the way viruses work, how they travel, how they affect people, and just look at history and plagues and illnesses, smallpox, you name it, how they ripple through societies and wreak havoc on populations. So we're not immune to that. Funny, use the word immune. We're talking about viruses. We're not immune to that, obviously. So stand by for more on this story as Miss Maltby, this is kind of her field when it comes to video topics here. She's going to dive deeper into the virus and discussions surrounding it upcoming. So stand by for that in the near future. Taking a look at gold today, sitting at $1558.80, up $2, 0.13%. You can see a really strong support level there, holding around that 1500 mark. It's even maintaining above 1550. As far as I'm concerned, it's really been bouncing around, but really blowing past that often. We saw that high during the war scare a couple weeks ago, hitting 1600 overnight and then retreating. However, it's really happily sitting above 1500, which I think is a feat unto itself with the strength of not only other asset classes but the dollar. There was an article recently about the strength of the dollar and other currencies and how at the same time gold is continuing to rise. And most of you should know about the uniqueness of that situation if you've been part of this channel for any length of time. So gold, yes, holding strong, 1550, 1558, 1500 mark. Yes, the chart there, obviously, if that was any other asset class, like I've mentioned before, it would be talked about routinely, and people would be promoting it, recommending it. Just that chart right there screams strength, and I think gold is a very strong place to be right now, and you'll see why as we move forward. Again, it's just another variation of the same themes that we continue to talk about, but there's some new information with Davos out and the discussions there on the world stage of international finance. Let's take a look at silver real quick. Silver's chart's trying to resemble gold. You can see that decline there from February to about June. It was in a state of serious decline. Picked up there when gold did and peaked out over $19 an ounce. And now we're seeing it in a state of, it's trying to stabilize, consolidate. It's having a really hard time holding anything above that 18 mark. It really declined there from about September to December and then rose out of there, breaching 18 again and then retreating below 18. So again, silver, just as I've mentioned in past silver videos, it's unpredictable at times. At times it's definitely more volatile in my opinion than gold. If you're familiar with the medical world, it almost resembles ventricular tachycardia or torsades. It's up and down, and it's a very violent rhythm on a chart. It doesn't seem like it has a steady incline that much at this time. And again, it's heavily manipulated. We know that the spoofing world has been uncovered. We've seen there's convictions. I would expect more convictions this year. JP Morgan really being one of the main perpetrators in the crimes of manipulating the silver market. I don't think they're the only ones. I think there's a lot of international players that manipulate the silver market. I think governments are involved. It's one of those shady, dark, mysterious worlds in finance, and it doesn't get a lot of attention. We try to talk about it here. Other channels talk about it. Any metals channel, especially some of the big silver guys, they're very aware of what takes place in the shadowy world of metal manipulation. Gold also manipulated, but silver it's the one that it's like the weak little chicken in the coop with no feathers left that just all the other chickens pick on. It seems like the one commodity that everyone tends to just beat up on in the international world of money, finance, and banking. Just the fact that institutions like JP Morgan can do what they did, and the news is out there, the evidence is out there, the convictions are happening, people are being arrested, and it just seems there's no consequence to it. It doesn't really affect the price much. There's no revealing or exposure of the information that we want to see as far as how much physical there is versus how much paper. How are these institutions able to do what they're doing legally? I mean, it's almost like there's collaboration between them and investigating agencies. The Commodities Exchange Commission, the securities, all of those regulators, it seems like, are guilty of almost turning a blind eye to what takes place in the multi-billion-dollar world of silver. It's disheartening. I know it's definitely a demotivator for a lot of people that stack silver. They sit there and they buy it and they see it, they watch the prices, and $17 really is not that big a deal in silver. In my opinion, it's still a good buy at that price. Could they beat it down to 14 again? Absolutely. Could they beat it down back to 8? Likely, yeah, they could. I was surprised when silver did take a heavy beating during the last financial crisis and dipped to the levels it did. A friend of mine at that time was always talking about just buying monster boxes of silver because we wouldn't see silver that low again for some time, and I think he might be right. I think that those levels of $8 and $9 silver, when you could get monster boxes of Eagles for just unbelievably discounted prices, yeah, he should have. Anyone who had the opportunity to do so then probably made out fairly well. The people that were buying in, at the $20 to $40 range, I think they got hurt. 20 to 30, that's brutal. Of course, there's that outside chance that it's going to reach those levels again in the near term, but it's going to be a war, a battle, a major fight to achieve those levels. I think the chances of silver reaching those greater than 20, those $30, especially the $30 range, is far less likely than gold reaching some of the levels we talk about that are kind of outlandish, greater than $2,000, $2,500. I think gold just has a very strong booster rocket attached to it right now when it comes to central bank hoarding, private investment, the vaulting of gold by the elite. A lot of contributing factors being that it is monetized and hedged and hoarded by major financial institutions, banks, kingdoms even, hoarding gold. Silver, still a valuable metal long term. I mean, you're talking about an asset a metal that's existed with humans as part of the monetary unit of exchange for 7,000 years. So I know I've kind of gone off here on a tangent. This is not the premise of this video, but it's just a reminder that silver is still a good metal. Even though it struggles to achieve the levels we wish it would be at eventually, I look at it, as, hey, this is an opportunity to continue buying silver at prices that might not be seen in the future, because it could go higher than this, and it should and it will, just based on supply, demand, mine closures, mine supply, as well as hopefully we will see it more recognized in the future as more and more of society wakes up to the death of the fiat empires and the death of fiat currencies and realizes, wow, there's alternatives. There's things like precious metals that we can look at. So I think silver's still going to hold out. It's definitely going to outlast and outlive any of the fiat that you use and handle on a day-to-day basis. We all know where fiat ends up. It all ends up on the trash heap of history in the graveyard marked for dead and extinct fiat, which there's, 3,000 extinct fiat currencies currently or more. So they all end up there eventually, and the average lifespan of a fiat is, 30 years? The U.S. fiat paper, the Federal Reserve note, it depends what time frame you want to look at it. The death of gold, as far as private ownership in this country, 1933, we're looking at the gold window closing in 71, so that's really the death of gold internationally as a use of payments for debts. So yeah, since 1971 till now, we're talking about a 40-year unpegged dollar. So the dollar's outlived its expected lifespan as a fiat, and eventually it will go extinct. It's a matter of historical fact and precedent that's already been established. So we'll see what happens when that occurs. When silver does shine the brightest, I believe, will be when the dollar is finally entombed. It's always pleasant when the channel and you, the viewers, are vindicated in why you are here and your outlook and such. When you read headlines like this, Guggenheim says market a, quote, Ponzi scheme that must collapse. This is from Bloomberg News. It came out yesterday. Let's take a look at some parts of this here. Scott Minerd has a message for his fellows at Davos who are applauding rallying markets. Things aren't as good as they seem. The Guggenheim Partners investment chief likened the inflation of asset prices caused by the loose money policies of central banks to a Ponzi scheme that eventually must collapse. We will reach a tipping point when investors will awake to the rising tide of defaults and downgrades, he wrote in a letter from the World Economic Forum meeting. The timing is hard to predict, but this reminds me a lot of the lead-up to the 2001 and 2002 recession. Minerd's warning to clients came before U.S. President Donald Trump spoke to a delegation in Davos where he faulted the U.S. Federal Reserve for trying to raise interest rates and said the central bank took too long to lower them. The European Central Bank will, on Thursday, decide about the direction of interest rates as officials weigh the extent of an economic slowdown. So they're weighing an economic slowdown and they're discussing the direction of interest rates, which most of us can assume will either go down or even into negative territory. As we remember, recently we discussed Donald Trump was actually calling for negative interest rates and urging the Federal Reserve here in the United States to do so. Minerd cited rising defaults despite a rally in riskier assets and reiterated a warning that BBB-rated bonds risk further downgrades. He said that type of debt is at a greater risk of deterioration than it was in 2007. Let that sink in. Ann Walsh, Guggenheim's fixed income chief, said in an interview that 15% of the U.S. economy is already in recession. She said the Federal Reserve's efforts to pump liquidity into markets has created zombie companies. Hey, we've used the word zombie currency, zombie economy here. That's great. That may see an outflow of capital as the utility of that money continues to diminish, she said. The longer that this market runs, the harder the fall will be when it ends, she said. Patience will lead to bigger opportunities for disciplined investors who don't wander off into exotic asset classes or chase current returns, Maynard wrote in the letter. Very important closing statement there, the part where he refers to patience leading to bigger opportunities. A good friend of mine told me, and I know it's a common saying, that at times like this and with certain markets, the wealth you will gain is by being patient. The patient gaining wealth from the impatient. A lot of people are going to go out there, and a lot of people are currently looking for these quick buck, quick short-term returns. And I believe what this individual Minard is saying is there really isn't a lot of money to be made or wealth to be even preserved, if that's what you're going for, wealth preservation, in the current markets. There is a tremendous downside risk. And we're seeing that theme reiterated time and time again from people like this, individuals that likely have a little bit more experience and are a little more versed in what's going on around the world, behind all of the closed doors and across all of the varying borders, into the direction of the world economy. Okay, when we see things like zombie companies, we've seen what's taken place with the repo markets, a lot of comparisons to 2007. Just recently, a month or two ago, we talked about the comparisons between today, what's taking place in the economy, what took place back then. It was kind of like a little historical review for those of you who were younger or asleep at the wheel during the last financial crisis. Well, it's good to have you here now. It's good to be paying attention now. And we'll have to sit back and see what happens. We saw what Guggenheim had to say, and now there's this headline. Hedge fund giant Seth Klarman says the rocket fuel feeding this rally will soon run out. This was published today, January 22nd. Now, not to review too much of what we've already discussed, we're just going to pay attention to the key points here before we move on to the next article, more closely looking at some opinions regarding gold as it pertains to all of this. Seth Klarman, who runs Baupost Group in Boston, wrote in a letter to investors that the rocket fuel that has propelled markets in 2019 will run out. He also noted about 31% of the fund's portfolio was in cash to end 2019, so they're obviously taking a defensive posture currently. Stocks are coming off a blockbuster year as the S&P 500 surged nearly 29% in 2019, its best annual performance since 2013. Klarman also noted in the January 15th letter he is worried about a possible, quote, liquidity trap, as low rates don't seem to jolt economic growth, especially in Europe. And of course, amidst all of these types of articles, we see things like this. Hold gold as deficits don't matter. Billionaire David Einhorn. Again, an article from today, Wednesday, January 22nd, 2020. It's from Niels Christensen, and this is off of Kitco News, a really reliable source for precious metals information and news. If you wish to pause it and read the complete screenshot here of his opinion and things he's discussing, I believe the most important material is to be found at the end. We already know about the monetary policies and the adverse outcomes related to these policies. That's a given. But let's read what Einhorn has to say regarding precious metals. Again, it says here, Einhorn has been a long-term gold bull. Last year, Kitco News had an opportunity to ask him about his investment in the yellow metal. And he says, quote, I hold gold, and I'm never going to get rid of it. I hope that I never have to use it, unquote. He said in May during the Sohn Investment Conference in New York City. Einhorn's outlook on gold came the same day Ray Dalio talked up the yellow metal at the World Economic Forum in Davos, Switzerland. In an interview with CNBC, the founder of Bridgewater Associates said that cash is trash and gold should be part of a balanced global portfolio. Bridgewater sees gold pushing to $2,000 an ounce as central banks ignore growing inflation threats. So there you have it, gold pushing to $2,000 an ounce, cash is trash. Seems like some of these guys are in tune with what's happening and what's going on. And I'm not the only Looney Tune crazy bin that's out there talking disparagingly about cash and urging individuals to look at gold as an alternative and as a safety, as a secure place to park wealth during these troubling times. Thanks for tuning in to the Junius Maltby channel for today's installment of Gold Motivation. I pride myself in being the cheerleader of the yellow metal, this archaic and barbarous relic, this lump of lifeless metallic material that has served humanity for 70 centuries as a unit of exchange, a store of wealth. As we all know, gold is money, everything else is just credit. History has taught us such. The experts and all of those who have made their mark on the world scene of finance and banking seem to always secretly come to the same conclusion. Even if it's not out in public eye, secretly, they know what the real wealth is and they hoard it away. Don't believe the individuals like Bernanke who say they hold it out of tradition. We know that is not true. There is no tradition among these people at the highest levels. These banks are hoarding and vaulting gold for very specific reasons, as well as their friends, the elite, who are now vaulting physical metal, taking it off of the market and physically holding it rather than holding it in paper. Don't accept a receipt for your gold. Remember, if you don't own it, if you don't have it in hand, it doesn't exist. Buy physical, stock up and hoard physical, and ride out the economic storm with peace of mind, knowing that your wealth is secure and you can look at it anytime you wish. Nobody can hack it. Nobody may even know you have it. Hide it away, protect it. And remember, you're not the only one. There's more like us, and we will be secure in our financial position when this storm blows over and the sun comes out again. All right. Don't forget to like, share, subscribe, and tune in always here on the Junius Maltby channel. Thanks for being here.